economy is shrinking again, just after the Bank of Canada said everything was just fine. What's going on here? We need to take a look at the real indicators which explain the truth. Well, you came here for the truth, so let me unveil that for you. Today we are going to have our focus on Canada. Let's begin. A report came out talking about the GDP of Canada, and it apparently unexpectedly contracted. That's right. We can see that at this time, Canada's economy has contracted by negative 0.1%. What was it supposed to be? The expected GDP? It was positive 0.1%. Now, there is no real statistical difference in between this. Just because one is negative or positive, that's not a factor. Why don't we look at real details? What has made it get into this territory in the first place? You know, I don't believe much of these statistics, particularly because of their funny accounting rules. All nations do not use GAAP, generally accepted accounting principles. That's what every corporation is supposed to use. They don't, but that's what they are supposed to use, and that would tell us all of those unfunded liabilities, and they would have to declare them as part of their balance sheet, but they can keep it off of their balance sheet and make everything look like pretty flowers and rainbows. Look at this. The nation's currency dropped 0.44 cents to 77.57 US cents after Tuesday's report, which may fuel concern that the Bank of Canada's caution with raising interest rates will only deepen. And there's no rush to cool the economy with further hikes. Something that I've talked about, that this economy cannot withstand more interest rate hikes. I would love to see interest rates go higher for obvious reasons, but it won't, at least at this time. It can't withstand it unless they are intentionally attempting to cause a collapse. So there's some economists here who have some words to say. A weak result has us on track to see the deceleration in growth in Q3 that we were expecting, apparently they were expecting it now, to less than half the pace seen in Q2. That justifies the Bank of Canada's current wait-and-see, that's pretty funny, approach to 2 quick hikes. They had an amazing Canadian economic data, apparently. I don't know where these statistics come from, but I'll give you a little hint in a moment. With growth coming back into reality in a hurry, there's no debate that today's soft reading is a surprise and a disappointment. There were some special factors involved, including a monster mash of maintenance shutdowns. Okay, they name these silly factors. So let's skip this, okay? This is nothing but garbage, all right? That's what we need to understand. Nothing but garbage. But this is what most people read, and this is what those in the financial community are reading. They're reading this type of thing. They see a contraction of negative 0.1%, and it sets everyone off in a frenzy. Now, the real economy is obviously much lower, okay? But if it was really minus 0.1%, is that anything of significance? No, not at all. Just because it's in the negative territory. But I'm sure in the next quarter, they will make it on a rise. Of course, you don't want 2 quarters negative in a row. They always do it like that. The Parliamentary Budget Overseer is predicting a budget deficit in the current fiscal year that's almost $2 billion higher than it was forecast in the government's fall fiscal update last week. The deficit this year will be $20 billion. And of course, that exceeds the last prediction. It goes on. You are not going to be able to shrink the deficit. It doesn't work like that. All countries seem to be engaging in more debt, more deficits, more quantitative easing, and all this garbage every single year, give or take. So this right here is the Canadian stock market, and what you can see is that it has really come up since March 2009. you'll see that. In fact, it has basically doubled at this point. A lot of people would say those are great gains. This is something to be proud of. Oh, Canada, we stand on guard for thee. And this would be great, except you seem to not want to factor in this here. It was previously at 15,000 10 years ago. Today stands at 16,000. When you factor in inflation rate, even the fake inflation rate that we are provided with, you'll see that this is not a good number. This is not something to be proud of. And let's think about this for a moment. Okay, my opinion is that the inflation rates are significantly higher than what they use because they tend to use a measure of inflation that doesn't account for all of your expenditures. So by definition, that's a falsehood. That's fake. If it's not going to include things like energy and food, well, aren't those possibly the two most important things that people are buying? But they say they're too volatile. That's why they can't include them. Okay, anyway, back to reality. So you're seeing the stock market. It's back at the levels 10 years ago. That would be okay, except the fact that they are engaging in these stimulus packages all over the world. They're getting bailouts for all their friends, the banks, and yet still 10 years old. That's not a good thing. You've injected all this stimulus into the market. It's only made its way into a few things: bonds, stocks, and housing. Those are the three major areas where quantitative easing, where low interest rates have really been ballooning up. Look at the gold market, for example. You can see the quantitative easing hasn't made its way there. Looking at this here. So when I see this type of activity, I have to wonder, what's really going on behind the scenes? The money's not flowing here, that's for sure. And I have to question, is there a scenario like what's happening with the Bank of Japan? Are they the only buyers out there for the Canadian stocks, just barely pushing itself up to the levels that we experienced 10 years ago? We'll have to keep a close eye on that. Look at the interest rate. They've claimed that they've had this little interest rate hike, and this has been an excellent success. It shows the strength of the Canadian economy, and all of a sudden, right after that, they say, oh, the Canadian economy contracted. We were really surprised by it. It's a contraction. I don't know what to do. What should we do? So on. Just previously, you were telling me that the economy was doing so well. It doesn't change in an instant. I don't believe that for a second. So obviously, the heads of the central banks meet together and they decide policy. The Fed, Bank of Japan, ECB, Bank of Canada, Bank of England, they all get together and they say, okay, you can do yours this month, and then we'll have to hold off until it's our turn, which is 6 months from now. Okay, and then you can do yours 3 months from now. I'm sure they're making these deals behind the scenes, and we know that what they've done, the banking industry. I mean, look at the LIBOR scandal. Look at everything that's happened. All behind the scenes, all not transparent. Some information comes out, which is great, but ultimately, we are waiting on these criminals to make decisions for the things that will affect our normal daily lives. This is insanity. Look at this. This is the reason. This is the reason why everyone should be worried about Canada's economy. And when I talk about this, I am consistently ridiculed. Canada's household debt to income ratio hits a record in Q2. So what are we talking about here? How high can they possibly get? Well, 168%. Ratio of debt to disposable income, 168%. You can bend this and manipulate this and try to make it look rosy in any way you want. And that's fine. You can do that. That's really fun to do that, to have a fantasy land. All you need to know is that Canadians are in the most amount of debt they have ever been in their entire history. Ever in history. You can't sustain that level of debt. And look, the stock market is at levels from 10 years ago and still at the maximum amount. People are taking home equity line of credit. They're taking their second mortgages. They are pushed to the absolute rim on how high this lid can go. And they're bursting at the seams. Credit card debt, student loans, the same thing exists in Canada that exists in the US. It's the same situation. In fact, it's much worse. That's what's so crazy. It's worse than it was during the financial crisis. But a lot of people talk about it and they say, look, we didn't have all that fraud with the paperwork, with Fannie Mae, Freddie Mac, with the subprime crisis and all that. That didn't happen in Canada. Oh no, it did happen. It was the only thing that didn't happen was that it didn't get exposed yet. Because of the financial crisis, housing crisis in the US, really exposed the problems that was going on in the US, and things lay dormant for a little while. But with the home capital issues that existed not that long ago now, you saw the real fraud come out. The alternative lenders were showing their true sights, and doesn't really surprise me to see that it has continued to get worse. So that's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature that will allow you to flip through the pages of these books to see if you like them. If you want to know about some of that information I was talking about, Canadian real estate in general, you can definitely check that out in my first book, The Money GPS. If you want some of that type of information, familiar tones in that one, in the next book, but also get into some of the other aspects like becoming self-sufficient, earning income, then you definitely want to check out Global Economic Collapse. Take care.